Are you hoping to join the ranks of the Crorepati or the millionaires? Obviously, this is a real possibility if you make intelligent choices as an investor. It is possible to become a Crorepati. However, it will take time. Investing requires self-discipline and a commitment to the long term. Choosing a systematic investment plan or SIP is one strategy for maintaining investment discipline. In this video, we'll go through several important investment methods that can help you become a Crorepati, such as the 7 stages of becoming a Crorepati and how equity mutual funds and stock investing can help you achieve your financial goals, and how smartly you can invest in equity mutual funds and in stocks. Stay until the end of this video because we are going to discuss the 7 steps to becoming a Crorepati, investing smartly in the equity mutual funds to become a Crorepati, and becoming a Crorepati by investing in stocks. Here are 7 steps that can ensure you become a Crorepati. Even though it seems simple, investing is one of the hardest things to do. Since so much is at stake, you must be careful and plan ahead to ensure your investment goes well and gives you good results. Let's have a look at the 7 steps that can make you a Crorepati. Step 1. Put your money to work for you with systematic investment plans. Mutual fund companies often give investors a systematic investment plan or SIP tool to help them save money over time by investing a certain amount at regular intervals. Moreover, it facilitates the use of compounding to maximize investment returns. Most investors in the stock market try to time the market by purchasing stocks or indexes at low prices and selling them once they have risen in value. This way of thinking causes regular investors to make a lot of mistakes in allocating their assets. They like to buy high because of the excitement of a bull market and sell low because of the pessimism of a bear market. Step 2. Start investing early. Starting an SIP as soon as possible is an important step to becoming a Crorepati. For best results, get a head start right away. By doing so, the investor will be able to take better advantage of compound interest. According to experts, whether you start investing early or late can make a big difference in your wealth, especially over a long period. A slight delay could make a big difference in how good your final product is. In the long term, research has shown that even a minor delay in investing might produce a huge output gap at the time of redemption. Step 3. What step is to be taken next? Investors should first write out their long-term financial objectives to establish how much mutual fund investment one has to make each month and what the debt-equity mix should be. Step 4. Contact the appropriate institution or a person. The next step is to choose a trustworthy fund company and fund manager. They are the folks you can trust with your life savings, since they'll be the ones to tend to it every day till you redeem. Time and effort are invested heavily in this procedure. After the first plan is signed, investing the regular SIP installment on the predetermined dates is a question of cold, calculated execution. Step 5. Shake it up. Using an SIP is not the same as blindly investing in the stock market. Significant portfolios have diversified holdings that expose them to several types of risk. The proportion of equity to debt is a key factor in mutual fund investment. The investor's risk profile and thus the asset allocation should be reevaluated every few years. Step 6. Participate as a gardener. Contrary to what Warren Buffett may have you believe, investing in an SIP is not as simple as making a lump sum investment and then forgetting about it. Instead, it's more like the work of a gardener who must tend to his plants practically daily to prevent the growth of weeds. Instead of treating their assets one at a time, investors should take a more holistic portfolio-level approach. Regular maintenance is needed on the SIPs that make up such a portfolio. So, an investor should compare the returns of an SIP to its benchmark to figure out how much they can save and grow over time. And step 7. Collecting the 1 crore. The fact that you've made it this far is a big deal, but it's not enough to just invest. You must also take the money out. That can also be done in a planned way. With a systematic withdrawal plan or SWP, you can get your money out of your investment when you reach a certain age. You can't lose sight of the end goal of your investment, and you need the plan to get there in the time you have and with the amount of risk you're willing to take. Before we move to the investment in equity mutual funds, make sure to hit the thumbs up icon below to like this video. Investing smartly in the equity mutual funds to become a Crorepati. Your investment decisions will require prudence. Equity mutual funds are an excellent way to invest because over the long term, they can grow faster than inflation. Though you can't count on a specific rate of return from your equity mutual funds, you may use historical performance as a guide. Look into the historical performance of some of the most common types of equity funds to get a feel for how much money you can make with them. Although there is no guarantee of a fixed rate of return from equity mutual funds, past investors have seen yearly returns of 10 to 14%. As you can see, the large cap equity mutual funds paid 13.5% returns. Large and mid cap paid 15.94%, and Flexi Cap paid 14.52% returns for 10 years of investment. Let's take a look at several possible futures and estimate how long it will be until you can retire as a Crorepati. If you invest 20,000 rupees per month on the rate of 15% returns, you will become a Crorepati in 14 years. On 12%, you will become a Crorepati in 15 years. It all comes down to your returns when estimating how long it would take to accomplish your goal of 1 crore. Instead of hoping for the highest possible returns, you should plan for the worst case scenario based on this data. It's never a terrible idea to increase profits and progress towards your goal. The investor may choose one or more equity funds from various categories like large cap, mid cap, flexi cap, etc. You can consider these best mutual funds in India to invest: ICICI Prudential Technology Fund, Tata Digital India Fund, and Quant Mutual Fund. Becoming a Crorepati by investing in stocks. Unfortunately, there's no simple way to make millions of dollars via the stock market. Discipline, hard work, and an in-depth grasp of the industry are essential, just as they would be in any other company venture. It's important to think like a retailer who often stocks up on items trending upward in demand before reselling them at a profit. Learning the principles of technical analysis is the best course of action. Companies' fundamentals, such as the balance sheets, profits, debts, etc., are analyzed in this section. The wait is tedious, but the payoff is excellent. Here we get to the point of analysis when we really use those pretty charts to help us make decisions. You may either develop your own trading strategy from scratch. Don't be taken in by tip services and don't rely on free TV tips. These tidbits are designed to enhance the network's total day viewership ratings or target rating points or TRP. To profit from stocks, it is crucial to keep an eye on turning moments, focus on volume, and grasp how indicators work. The stock market is a viable way to amass a fortune. We need to do some math to figure this out. You should invest steadily every month without fail. A 10% yearly rise in your monthly investment amount should be your goal. If we talk about Nifty's average returns over the last 25 years has been 13%. If you have a monthly income of 10,000, you can invest only 10% of it or 1,000 rupees, and after 32 years, you would have 1 crore. Don't stop there. Add 10% to your SIP contribution every year. For example, if you invest 1,000 rupees per month in 2022, you'll need to invest 1,100 in 2023 and so on. We have raised the proportion saved as the pay has improved, since it is difficult to hold a large amount of money when your salary is low. Someone who's making 50,000 rupees per month should invest at least 2,500 every 2 weeks. It shouldn't be too tough to save 30% of your income after monthly income exceeds 1 lakh rupees, even while maintaining a decent standard of living in a metropolitan area. It would be difficult for someone making 20,000 rupees per month to save more than 10% of their salary, since so much would go to their needs. All of these amount figures presented here in this video are approximations that will vary from person to person, from city to city, and from other variables. This is not a get-rich-quick investment program, so please keep that in mind. There is no such thing, and if you happen to stumble upon it, you should immediately turn in the other direction. Planting a sapling is a metaphor for riches' slow but steady rise. This cannot be accomplished suddenly. If it is, the wealth in question is not stable. After all, it's your life and your money, and it's totally up to you where you want to invest it. But invest it wisely. This was all for today's video to guide you on how you can make 1 crore by your investment in different ways. Make sure to subscribe to the channel and press the bell icon before leaving this video. And also tell us where you're going to invest your hard-earned money to become a Crorepati in the comments section below. We've also uploaded a video on making 1 crore by the principles of the psychology of money on our channel, which can be very helpful to you for knowing all the secret tips to become rich in that book, and how you can follow the principles of that book to make 1 crore. You can find the link to that video in the description below and in the card.